Well, yes. I mean, we always said that we would return at least 4 billion. And, the board has looked at our position over the last few months, and we've got a very strong position. You can see from the results this morning. So we decided to return the 4.75 billion. We sold 8 businesses last year for 7.5 billion. And with the reduction in debt and the 4.75 billion return, we will have returned the money to shareholders that we said we would.
To what extent were you prompted to do that by the criticism from Cevian that we know argued that 4 billion was too low?
Well, we didn't see that as criticism. It was a point of view, and we listened to all of our investors, but actually we made the decision based upon our results, based upon the surplus capital within the business, and based upon the strong operating momentum that you've seen in the results that we've delivered this morning.
Can we talk a bit more then about operational expectations for full year 2022? What guidance are you giving the market here as to your new targets?
Yeah, so basically we've got 3 new targets this morning. One is an upgrade on our cost reduction target, where we're taking the cost reduction target to 750 million gross of inflation. We're giving a new target on our operating funds generated of 1.5 billion by 2024. And we're also upgrading our cash remittance target to greater than 5.4 billion by 2024. So I think it shows the confidence that we have in the business for growth and to continue the strong performance that we're already delivering.
And can you talk about the lower operating profit from the UK and Ireland Life, which you flagged up in the numbers? What actions being taken to improve performance?
Yeah, so look, some of that was driven by market conditions. So lower spreads drives a lower margin in the bulk purchase annuity business, and I think that's to be expected. And we're saying that will continue as we go forward as the market normalises. But also there's less one-off actions, and so actually the underlying performance is pretty strong. And the way that we look at the performance of the business is really around the cash remittances from the business, which are up 22% on 2020. In 2021. So we see that as being a sort of really strong indicator of performance, particularly for an insurance company.
Amanda, obviously you don't operate in a vacuum, so it'd be useful, I think, just to address some of the current threats to performance this year. It does appear that central banks are rethinking the glide path for interest rates this year based on the potential shock we see from sanctions on the Russian financial system and higher oil prices and generally the higher risk of inflation or possibly stagflation. How are you trying to put that into your numbers as you think about what lower interest rates in the UK would mean this year for Aviva?
Yes, so obviously, Jeff, we're always looking at the sensitivity to interest rates, and there's loads of detail on that in our results today. But generally, of course, we've been operating in a low interest rate environment, so it's something that we're pretty familiar with. The issue around inflation is really more the impact on our customers, and what does that do to our customers? So we've seen very strong savings flows in 2020 and 2021. It's whether customers will need to make choices, as we would expect them to, around what they're going to spend their money on. So that potentially impacts our flows, and obviously the P&L is impacted by higher supply costs and also higher wage inflation, and that's something that we are factoring into our numbers as we sit here today.